Do I really need a 20% down payment to buy a home? This might be something you've asked yourself, but the short answer is not always. Lots of buyers are surprised to learn there are plenty of options that require much less down. Today, I'll walk you through some of those options. With home prices and interest rates constantly changing, a lot of buyers assume they need to save for years before they can afford a home. But the truth is, some loans require as little as 3% down or even nothing at all in some cases. So today, I'll break down why the 20% rule exists, when it actually makes sense, and what your options are if you want to buy a home with a smaller down payment. For starters, why do people think that 20% is required? The idea that you need to put 20% down comes from one main factor. If you put down less, most lenders will require what's called private mortgage insurance, or PMI. But that doesn't mean you can't buy a home with less. It just means you might have a small extra monthly cost until you build enough equity in your home. However, there are some key benefits to putting 20% down or more. Number one, you avoid that PMI, which means one less monthly expense. Two, you have lower monthly payments since you're borrowing less. And three, you often can get better loan terms, sometimes even including a lower interest rate. But here's the thing, most buyers don't put 20% down. In fact, the average down payment for first-time homebuyers is only about 6 to 7%. Okay, next, what are your lower down payment options if you don't have 20% to put down? There are plenty of loan programs out there that let you buy a home with a much smaller down payment, and here's 4 of those options. For starters, a conventional loan, where you can put as little as 3% down with good credit. FHA loan, which allows just 3.5% down and is ideal for buyers with lower credit scores. Number 3, a VA loan, which is 0 down for military and veterans that qualify. And number 4, a USDA loan, which is 0 down for rural properties and some suburban properties that qualify. So these programs make homeownership much more accessible, especially for buyers who don't want to wait years to save up a large down payment. And lastly, when does 20% down actually make sense? Well, you don't need to put 20% down, but in some situations, it can be a smart financial move. Here's some of the situations where it makes sense. First off, you might just want the lowest possible monthly payment. Number 2, you might have the funds available to put 20% down without digging into your savings or retirement accounts. And number 3, you prefer to avoid paying that extra monthly amount for PMI. However, for many buyers, putting less down and keeping cash in savings for emergencies or for home improvements is just the better choice. The bottom line is you don't need 20% down to buy a home. There are plenty of options that can get you into homes sooner than you think. If you want to explore those loan options and see what works best for you, give me a call or send me an email today and I'll get you connected with the best in the business. In the meantime, thanks for tuning in and stay in touch.